Okay, good morning, colleagues. Good evening, good afternoon, and welcome to the second day of this webinar, which is being jointly organized by the IMF, ESCAP, and United Nations Statistical Division. My name is Alik Nyasulu from ESCAP Statistics Division here in Bangkok, Thailand. I think we are ready to get underway. And thanks for tuning in at this ungodly hour. Thank you so much. And I'll invite Peter Harper, who is the project manager for the whole SNA update process. So we are really hearing from the horse's mouth here. So he will begin by giving us an overview of the main changes in the SNA. So, Peter, I'll let you have the floor, please.
Thank you very much, Alec. And just confirming that you can hear me and that you can see my presentation on the screen.
Yes.
Excellent. So, yeah, good morning, good afternoon, good evening to everybody who's joined in for this presentation. Yeah, I'd like to extend my welcome, and yeah, it's really good that you have the opportunity to hear about the proposed updates to the 2008 SNA, which will be reflected in the 2025 SNA. As Alex said, my name is Peter Harper. I'm the Update Project Manager, but I don't work alone. I work very closely with Peter van der Ven, and he's the lead editor. And this presentation that I'm about to make, I'm presenting on the behalf of both myself and of Peter. Okay, getting into the presentation itself. I want to cover two main areas in our time together. Firstly, I would like to talk a little bit about the recommendations for conceptual changes to the SNA. That'll probably take up the bulk of the time of the presentation, but as well as recommendations for changes that impact on the concepts of the system of national accounts. There are also a number of other recommendations which involve additional tables or data items, and I'd like to also talk a little bit about those. And then I'll finish off by very briefly explaining where we're going to with the process for updating the SNA. So before I get into the detail of the changes, I just thought I'd show you this slide, and I'm not going to go through it in any great detail. This slide and the next one provides a summary of all the proposed changes to the SNA, and it groups them by the nature of the change. So as you can see on this slide, there are some changes that are shown in a sort of a reddish brown colour. Those are the changes that involve conceptual change, and you'll see there's relatively few of those. The ones that are shown in the next group of columns in blue are the ones that involve additional data items and tables, and you can see the various types of data items and tables that are proposed in the various columns. And then there's a number of other recommendations that either clarify existing treatment in the SNA or provide guidance when we're talking about new activities that have emerged that the SNA is a little bit silent on, and how we need to reflect those activities within the national accounts. So that's the first of those overview pages. The next one shows you that in fact most of the work associated with the update of the SNA is on changes that involve clarification and guidance. And I'm not going to say anything more about those changes, those that involve clarification and guidance. There's plenty of information available on the project update website that excuse me, that you'll be able to access if you would like. to get more detail about any of these particular changes. So moving on now to looking at the recommendations for conceptual changes in a little bit more detail. As I said, there's only a relatively small number of conceptual changes that impact the key macroeconomic indicators such as gross domestic product and net domestic product, the government deficit and net worth. And in fact, none of the changes have an impact on the government deficit, but the ones that are listed on this slide have an impact either on GDP, NDP, and or on net worth. Just to summarise them, because I'll talk about each of these in a little bit more detail in subsequent slides. Firstly, we're going to be recognising data as a produced asset. Secondly, you will see this one's crossed out, the recognition of marketing assets as produced assets. Up until about a month ago, that was the proposal, but the proposed changes to the SNA were discussed at the recent United Nations Statistical Commission meeting, and that meeting did not agree with the proposal to recognise marketing assets as produced assets, and I'll explain in a couple of slides why that was the case. There are some conceptual changes regarding the recognition of renewable energy resources in the system, and there are also some adjustments in the treatment of biological resources. Importantly, depletion of natural resources will be recorded as a cost of production. I'll talk about that in more detail lately. We'll be adopting the so-called split asset approach for natural resources. This just shifts the value of assets across units on the balance sheets. It doesn't have any overall impact on macroeconomic indicators. We were aiming to improve the consistency in the application of the sum of cost method. There are some changes in the way we're going to be measuring the output of central banks. And then there are some other relatively minor changes that have no impact on the key macroeconomic indicators. So turning to data, and this is probably one of the most significant changes that we're making in the 2025 SNA. The 2008 SNA recognised databases as produced assets, but it didn't recognise the information content of those databases as assets. However, in the 2025 SNA, the data content of databases will be treated as a produced asset to the extent that it's collected and used in production, and importantly used in production for 1 year or more, because that's what's needed to qualify as an asset within the system. We don't see many transactions in data. Particularly data that's contained within databases, and consequently, in order to value this asset in the system, we're generally going to be having to revert to using the sum of cost method, which is a method that's used for other assets where we observe that most of the production of those assets is own account production. So in valuing these assets using the sum of cost method, we want to take into account the costs of planning, preparing and developing a data production strategy, the costs associated with accessing, recording and storing information embedded in these things called OPs, excluding explicit purchases of OPs and already produced data. And you may be asking the question, well, what is an OP? OP stands for observable phenomena, and that's the real world, if you like, things that are occurring that we're trying to represent in the form of data in databases. And that may be information about businesses, it might be information about households, it might be other things that are observed. And there's obviously a cost in terms of accessing and recording that. And occasionally that may in fact be purchased by the entity that's creating the database. We're also aiming to include the costs associated with designing, organising, testing and analysing the data in order to draw information and conclusions from it. And to the extent that other assets are used in the production of data, then we will be wanting to include the cost associated with the consumption of fixed capital for those assets used, plus a return to that capital. And just as an aside, in the 2025 SNA, we will be no longer using the term consumption of fixed capital. We'll be using depreciation instead. This change to the treatment of data in the system is potentially going to have a significant impact on GDP and net worth, particularly for those countries such as the United States and the Netherlands and Ireland and so forth, where we see the creation of large databases and reflecting those as assets within the system. The next item I want to talk about is marketing assets. In the 2008 SNA, marketing assets and a broader category of goodwill are only recognised as non-produced, non-financial assets. And even then, the measurement of them in the national accounts is limited to explicit purchases of the relevant assets, or they may be reflected implicitly when a corporation is purchased at a higher price than its net worth, and some of that value may reflect the implicit value of marketing assets of that firm. Now, like databases, most marketing assets actually aren't sold and purchased. They're generally constructed for own account purposes. So there's very limited visibility of marketing assets within the 2008 SNA. For 2025, as I mentioned, it was proposed to recognise marketing assets as produced assets, similarly to data, which would significantly extend the asset and production boundary. And as I mentioned, most of those assets are produced for own final use. However, when we went to the 2024 UNSC meeting back in February to get endorsement for the proposed changes to the SNA, the UNSC did not agree to the recommendation to capitalise marketing assets because of both conceptual and practical concerns. So the 2008 SNA treatment will be retained in the sequence of economic accounts. This topic, though, is quite important for countries that might have significant expenditures in marketing. Again, countries like the United States and the Netherlands, Germany, and so forth. And as a result, the topic will remain on the research agenda. And importantly, countries that do have these significant marketing assets will be encouraged to compile extended accounts with marketing assets treated as produced assets. And this terminology, extended accounts, replaces the terminology of satellite accounts that was utilised in the 2008 SNA. And extended accounts are basically accounts which are created using the SNA structures, but have different conceptual bases, such as, for example, a different view of the production boundary. So they're not part of the core accounts per se. They are something that the countries can produce if they feel that they're useful. But the SNA will provide guidance on how to go about producing these extended accounts. So the countries that do them will be able to do them in an internationally comparable way. And as with data assets, because most of these are developed on their own account, they will be valued using the sum of cost method in these extended accounts. And there needs to be further research in delineating in practice the expenditures that lead up to the building of the capital asset from those marketing expenses, which should be treated as current expenditures. There are some changes related to renewable energy resources and the treatment of biological resources. Firstly, in regard to renewable energy resources such as solar, wind, geothermal, there'll be explicit recognition of those as assets within the system. Now, a few important points to make here. Firstly, we're not trying to value the sun or the wind or anything like that. Rather, what we're saying is that there are some locations that are more conducible to exploiting these renewable energy resources than others. So, for example, if you've got wind power, you obviously want a very windy site. You typically want to maybe have these things closer to urban populations and so forth. And that means that, that there is rental associated with those particular sites, because they have particular attributes that make them useful for the production of renewable energy resources. And it's the rentals that we want to capture in the valuation of these renewable energy resources. At the moment, some of that will already be being captured in the system. So, for example, a wind farm that's on private land, then the rental associated with the wind generation will be reflected in the value of that private land. But a lot of these renewable energy resources take place on land or in the water that's not treated as an asset within the system, and they still give rise to these economic rents, and that's what we want to value in the system as these renewable energy resources. In regard to biological resources, there are 3 changes and clarifications to the 2008 SNA. In the 2008 SNA, there's a discrete choice between cultivated and non-cultivated resources yielding once-only products based on the extent of management and control, whereas the 2025 SNA will differentiate between migrating resources such as fish, which will be effectively treated as non-cultivated, and non-migrating resources, which will essentially all be considered cultivated based on the continuum from intensely managed to totally undisturbed. Again, I want to make the point that we're not expanding the asset boundary. We're not bringing in native forests, for example, where there will be never any intention to exploit them for timber, but rather where there is a either existing exploitation of a biological resource or firm plans to undertake that exploitation, then they will be treated as assets in the system and all treated as cultivated, even if they involve what would otherwise be relatively undisturbed resources. The regeneration of biological resources will be recorded as gross fixed capital formation, and similarly to mineral energy resources, depletion will be treated as a cost of production, and I'll talk about that more on the next slide. And there will be clarifications in regard to how work in progress should be measured for these assets. This sounds like a lot of change, but in fact, it's relatively small in terms of its impact. We would expect to see only a minor impact on GDP and no impact on net worth, because there's simply shifting between non-produced and produced assets, which are already recorded in the system, and between work in progress and underlying assets. But more generally, there will be much better and more useful information on how to record biological resources in the 2025 SNA than there is in the 2008 SNA. I've mentioned that depletion of natural resources will be recorded as a cost of production. In the 2008 SNA, depletion is treated as other changes in the volume of assets. So, this leads to the situation where you can, mine up all your energy resources and chop down all your trees and not have any impact in the on the core measures of the national accounts in terms of the depletion of those resources. This will change in the 2025 SNA, because depletion will be recorded as a cost of production, similar to the recording of depreciation. So this will have an impact on net domestic product. Up until now, net domestic product has equaled GDP less depreciation. In the 2025 SNA, net domestic product will equal GDP minus depreciation minus depletion. And that's potentially going to have quite a significant impact on NDP, particularly for natural resource rich countries like Australia, for example. Keeping on the theme of natural resources, we're introducing what we call the split asset approach for allocating these natural resources. In the 2008 SNA, natural resources are recorded fully in the accounts of the legal owner, and most countries that is typically the government, particularly for mineral and energy resources. In the 2025 SNA, it's recognised that in a number of instances, the resource rents associated with these natural resources don't flow fully to the legal owner. Often they're split between the legal owner and the extractor, where the extractor is a different entity to the legal owner. So the natural resources will be recorded in the accounts of both the legal owner and the extractor, according to the ratio of the resource rents that attribute to both of those parties. Depletion, as I said, will be introduced as a cost against production, and that will be accounted for in line with the treatment in the SEA Central Framework 2012, where the allocation of depletion is in line with appropriation by adjusting the rents paid by the extractor to the legal owner. There will be instances of changes in ownership because of this treatment, particularly when the value of some natural resource passes from the legal owner to the extractor. But those changes of ownership will not be recorded as transactions. They will be recorded as other changes in the volume of assets. And this might occur, for example, when a new lease arrangement is given to an extractor to mine some form of subsoil asset. This change, as I mentioned earlier, has no impact on GDP, NDP, or net worth, but it does change the allocation of relevant assets across sectors. Another change, which could be potentially quite significant, is improving the consistency of the sum of cost method. The sum of cost method is used in the national accounts when there is an absence of market prices as an approximation for market prices. And for market producers, when they produce output for their own final use, the sum of cost method in the 2008 SNA is that it's the sum of intermediate consumption, compensation of employees, consumption of fixed capital, the net return to capital, and other taxes less subsidies on production. But there are four issues in relation to the 2008 SNA treatment in regard to the sum of cost method. Firstly, when we look at non-market producers, the calculation for the sum of costs is different to that for market producers because it excludes that return to fixed capital. Secondly, there's an issue that return to capital is excluded for non-financial assets other than fixed assets, which begs the question, should a return to capital be included for other assets that are utilised in own account production? Thirdly, there's a question of whether payments for rent, for example, on land and natural resources that are used in own account production should be included or excluded. And likewise, given that depletion will be treated as a cost of production, similarly to consumption of fixed capital, should that be included or excluded where relevant in the sum of cost method? So in terms of the resolution of those issues, in the 2025 SNA, all relevant output valued using the sum of cost method will include a return to capital. So this will be the case for both non-market and market producers. There will be the inclusion of a return to non-financial assets other than fixed assets. It's already a return to capital for fixed assets. So this will bring inventories and non-produced non-financial assets into the scope of assets where we'll be calculating a return to capital. That said, the return to city parks and historical monuments will be excluded on pragmatic grounds, partly because it's likely to be very small in terms of own account production, and secondly, I don't think any country actually includes city parks and historical monuments in their balance sheets, even though conceptually they actually do belong there. Rent on natural resources that are used in own account production will be included as a cost element. Also, where relevant, depletion of natural resources will be included as a cost element. I say we're relevant because we can't think of too many instances where there would be depletion of natural resources in own account production. Obviously, there's depletion of resources in market production as extractors exploit resources, but typically we don't observe too much own account production associated with the extraction of natural resources. As I said, this change may have a more significant impact on GDP, particularly by including a return to capital for non-market producers and a more moderate impact on net worth. The next conceptual change regards to the measurement of the output of central bank. In the 2008 SNA, the possibility of there being FISM on central bank services is mentioned. And in terms of the services that are provided by the central bank, two types are mentioned explicitly: monetary policy services, which are non-market output, and supervisory services, which are either market or non-market, depending on the extent of fees that are paid for those services. And all our non-market output of the central bank is allocated to the government with a concomitant current transfer. In the 2025 SNA, FISM will be excluded on conceptual grounds because central banks typically aren't financial intermediaries. Secondly, there will be recognition of a broader range of services that are provided by central banks, including promoting financial stability and monitoring the payment system. Thirdly, all output will be considered as non-market output. And that means that any payments that are made by financial corporations associated with supervisory services will be treated as current transfers, not fees for services. And lastly, the output of central banks will be recorded as output for the own final use by the central bank and not allocated back to general government. The changes generally have no impact on broader level measures such as GDP, except for the change in the recording of payments made by financial corporations for supervisory services by changing those from fees, which are treated as intermediate consumption, to transfers, which are not shown in the production account, will somewhat increase the value added of financial institutions, and that will flow through in terms of a change in the value of GDP. So a range of other minor conceptual changes that will be made to the 2008 SNA. In regard to the treatment of dividends for foreign direct investment enterprises, they will now be able to be paid out of previous periods' operating profits, whereas at the moment the payment of dividends out of previous periods' operating profits is considered as a withdrawal of equity and not as a dividend payment. This does not have any impact on any broader aggregates because it has the change in treatment of dividends will have an opposite and equal impact on the measurement of reinvested earnings for foreign direct investment enterprises. So the total income of foreign direct investment enterprises will remain unchanged. There will be an extension in the definition of rent to include all non-produced, non-financial assets that are put at the disposal of another entity, whereas at the moment the rent is restricted to natural resources of an infinite lifespan. There will be recognition of the recording of work in progress for fixed assets partially transferred and for fixed assets produced for own final use. This will shift some work from fixed capital formation to work in progress, but will have no impact on the total value of assets. There will be limitations to concessional loans that are recognised in the system to only those that are provided by employers to employees. All equity in international organisations will be considered as other equity, and securities provided as collateral by central banks, which are not readily available for meeting balance of payments financing needs, will be excluded from the cash borrower's reserve assets. This means for gold swaps that this reclassification will lead to a demonetisation of gold bullion. While that change does impact upon the SNA, it's sort of buried in the detail, but it will have a more noticeable impact on balance of payment statistics, which explicitly recognise reserve assets in the system. Moving now on to the recommendations for additional tables and data items. Before I go into to those, I'd like to make a few general observations. And we can distinguish within the broader system of national accounts a range of types of data items and tables. Firstly, we have the sequence of economic accounts. Historically, this has been known as the core accounts. And this is the standard set of accounts and tables, the compilation of which is highly recommended. And this includes obviously the production account, the income accounts, the capital account, the financial account, and the balance sheet. Associated with that is a range of supplementary tables and data items, which, if you like, considered non-core. And then we have this notion of extended / thematic accounts and tables, and this is where, as I said earlier, we're able to in some instances change conceptual basis of the national accounts in the compilation of extended accounts and tables, and thematic accounts and tables are compiled using the same concepts as the core SNA, but they highlight a particular activity which is seen to be of analytical importance, such as, for example, tourism. A tourism satellite account is an example of a thematic account. Importantly, we need to recognise that the SNA does not have the power of law, so it cannot tell countries what to produce and what not to produce. But one of the main factors for the success of the SNA is that it does provide for the worldwide compilation of statistics according to its conceptual guidance, and that means that when countries compile statistics according to the SNA, they do it on a basis that's comparable across countries. The overall objective is to get as many countries as possible to compile the sequence of economic accounts, that first dot point that I mentioned above. But as far as the supplementary tables and items and the extended thematic accounts and tables are concerned, these are more dependent on national and regional priorities, and it's left up to individual countries to determine whether or not they should be compiling those based on their circumstances. But as I said, if they choose to do that, then there's a body of information in the SNA about how to go about that, so that the estimates are internationally comparable. And I mention this because when I go through the additional tables and data items, you'll go, gee, there's a lot there. Do we have to produce them all? And the short answer is no. In many cases, there will be discretion for countries as to what to produce depending on their particular circumstances. So with those introductory comments, looking by theme, the first set of additional statistics relate to accounting for well-being. So to arrive at an improved analysis of the distribution of income, consumption, saving and wealth across households, there will be standard breakdowns. So these will be in the sequence of economic accounts of households by income and wealth decile, and there'll also be more detailed labour accounts. In addition, there will be the option of supplementary breakdowns of households by other forms of breakdown, for example, household composition or by main source of income. And in regard to the possibility of extended thematic accounts and tables, the 2025 SNA will talk about accounts for unpaid household service work, accounts for education and human capital, and health accounts as well. To account for sustainability, well, firstly, we want to recognise upfront that there's a very already a very good international standard for measuring environmental sustainability, and that's the system of environmental economic accounting, which has two components: the central framework and an ecosystem accounting. And these frameworks are complementary to and are consistent with the SNA, and there's no intention in the SNA to duplicate what is in SEA. However, we do want to promote SEA as a consistent vehicle for producing in statistics on environmental aspects in order to inform on these issues of environmental sustainability. So there'll be quite a degree of discussion about that in the SNA. As well as that, within the sequence of economic accounts, as I mentioned, depletion will be recorded as cost of production. That in of itself will significantly improve the accounting for sustainability. But some of the other changes that will be made is that natural capital will be identified as a separate category of asset, which will include both produced and non-produced non-financial assets, which are considered to be natural capital. For some non-financial assets and financial assets that have environmentally related dimensions, there will be more detailed breakdowns of those. And more generally, there will be a focus on improving the estimation of natural resources. I talked earlier about how there will be better guidance on the treatment of biological resources in the system, but there'll also be more improved guidance on the treatment of other natural resources in the 2025 SNA. In terms of accounting for globalisation, to get a better understanding of the impact of globalisation on the generation and distribution of income, and also to improve the international comparison of fiscal balances. There will be standard breakdown of corporations into foreign controlled corporations, public corporations, and national private corporations. And of that last category, national private corporations, there will be an of which category, which will be those which are part of domestic multinational enterprises. In addition to that, various supplementary items and tables will be encouraged, including extended supply and use tables, and data on special purpose entities for those countries where these entities are important. In regard to accounting for digitalisation, we want to improve the visibility of the digital economy. And in order to do that, there will be more detailed breakdowns of certain asset categories within intellectual property products in the sequence of economic accounts. Digital supply and use tables will be encouraged as extended/thematic tables. And there will also be extended accounting introduced for free services such as those provided by Facebook, Instagram, TikTok, etc. And there'll also be further breakdowns of subsectors of financial corporations, of fintech-related activities as supplementary items for those countries where these activities are significant. Since the great financial crisis of the early 2000s, it's considered important to improve the accounting for financial risks and vulnerabilities. So there'll be improved measurement of non-banked financial intermediation, sometimes known as shadow banking, through supplementary tables with more detailed breakdowns of financial corporations, as well as additional details for certain financial instruments. There will be some supplementary breakdowns of financial derivatives by various classifications. And from whom to whom tables will be encouraged as supplementary tables. This isn't a change per se, because from whom to whom tables are in the 2008 SNA, but more emphasis will be given to them as a tool for accounting for financial risks and vulnerabilities. And there'll be a few other supplementary items and tables with supplementary data on concessional loans provided by government and international organisations. For reinvested earnings, the breakdown of foreign direct investment related dividends into payments as defined for non-financial foreign direct investment corporations and other payments, so the so-called super dividends, even though they'll be treated as dividends when they're paid by FDI entities, they'll be encouraged to be shown as supplementary items in the system. And more generally, for reinvested earnings, as supplementary items, reinvested earnings will be recorded for all equity in all corporations, direct investment as well as portfolio investment, and domestic investment as well as foreign investment. Again, I'll stress though that that's in supplementary tables and not in the core sequence of economic accounts. Debt securities will be valued at both market value and nominal value for liability positions in supplementary tables, and there will be a supplementary table on provisions broken down into 3 categories: those that are financial assets related, those that are non-financial assets related, and provisions that are unrelated to assets. So I'll finish up by talking about the the next steps in the development of the 2025 SNA. As I mentioned, the recent UNSC meeting endorsed the recommendations for the update to the 2008 SNA, with the exception of the capitalising of marketing assets. And from a drafting perspective, that's good, because we now know for sure what's going to be in the 2025 SNA, and we can continue to draft the chapters with a degree of certainty about the content of those chapters. So the drafting of the chapters continues. The initial focus of the work has been on 16 or so chapters, about half of the manual, which are considered to be new or substantially revised. These chapters have been progressively released for global consultation on a chapter-by-chapter basis as they've been drafted, and that work will come to a close in the next month or so. The remainder of the chapters, those that aren't new or substantially revised, they will be updated in the form of track changes, and so that people can look at them and quickly see the differences between the 2008 SNA and the 2025 SNA. And in June, August of this year, the complete draft of the 2025 SNA will be circulated for global consultation. We want to give people a good period of time to have a look at that. However, recognising that the new and substantially revised chapters will have already undergone a global consultation process, and this will also build on top of the global consultation that's been occurring throughout the update of the SNA through for example, the global consultation on all the various guidance notes that led to the recommendations for changes. We also appreciate that guidance needs to be provided for implementing the 2025 SNA. It will probably be a number of years before countries will actually implement the 2025 SNA, but to prepare for that, there's a significant program of work to develop guidance materials, particularly for those changes that are likely to be a little bit more challenging to implement, or potentially could have a significant impact on GDP, such as the capitalisation of data. And in early 2025, we will submit the 2025 SNA to the UNSC meeting for its endorsement, along with the strategy for implementing the 2025 SNA. So that brings my presentation to a close. Alec, thank you for that. I have covered a lot of information. As I said, if people are interested in getting more detail, there's all background information on the website for the update. And I know a number of these issues are covered in other sessions, but in the time available, the helicopter view was all that I was able to provide. So thank you very much for your interest. Back to you, Alec.
Thank you, Peter, and for your very detailed presentation on an overview of the key changes. And I think from the last slide, I would encourage everyone that as this process of global consultation goes underway, let us try to get involved as much as we can and give our ideas, and as this process is still ongoing. So thank you very much, Peter. And if colleagues, you have any questions, you can always put them in the chat, and or you can always raise your digital hand. Otherwise, thanks so much. At this point, I would suggest we go to the next presentation, because I don't see anything in the chat. But Peter, you might still hang around just in case there are some issues. Yeah. Or Hamish, I can see you have a hand. Please go ahead.
Can I sneak one in? Thanks. Thanks, Alec. Thanks, Peter, for bringing that. Just a quick question. On the distribution accounts and labour accounts, were they considered as part of the sequence of economic accounts or outside? Sorry, I might have missed what you said there. Thanks.
Yeah, thank you for that question, Hamish. It's good to see you when it's not 2 o'clock in the morning New Zealand time. I've been to a few meetings where poor old Hamish has to get up very early, or go to bed very late. Yeah, in terms of the distribution of income, the breakdown by income decile will be part of the standard items, but the other breakdowns will be supplementary. And we actually do consider labour accounts to be part of the sequence of economic accounts. So the production of labour accounts is strongly encouraged as part of that, but recognising that for many countries producing the core accounts are the highest priority. But once you've done those, yeah, labour accounts are strongly encouraged as a fundamental part of the system. Thank you.
Okay, thanks.
Thanks, Hamish, for your question and for the responses. Any more questions? If not, then we'll proceed to the next presentation, which will be done by Francine Berry, economist at the IMF Statistics Department. So she will focus on the financial issues in the update. So please go ahead. And
thank you, Alec, and good day to everyone. Just 1 minute while I share my screen.
I can see it.
And it's in presentation mode. Okay. Okay, so good day to everyone. And as Alex said, this presentation will focus on the financial issues in the update of the 2008 SNA. So you just heard from Pete on some of the issues related to the financial corporation sector, financial instruments that will be covered in the update of the 2008 SNA. Specifically, the updates of the SNA the financial issues are covered throughout the SNA in several chapters, but there are some main chapters that really address financial issues. So chapters 5 and 29 speak about institutional sectors and specifically the financial corporation sector. Chapter 25 and 12 and 14 speak about financial instruments and some of the and it covers some of the updated discussion on financial instruments in the 2025 SNA. And chapter 37 is a new chapter which speaks on from whom to whom tables in the 2025 SNA. So chapter 25, chapter 29, sorry, on financial corporations issues. It's a new chapter in the 2025 SNA, and it includes part of what was covered in the 2008 SNA in chapter 4 on institutional units and sectors, which to some extent discuss financial corporations sector and some subsectors. And also in the 2008 SNA chapter 21 on corporate activities. So in the 2025 SNA, in the updated SNA, this chapter will expand on issues related to the production account, as we just heard from Pete. It references some of the discussion in the UN's handbook on measuring financial production. The chapter also reviews the structure of the financial corporation sector and its subsectors. It includes more granular breakdown of the financial corporation sector and some concise information on the data sources, the different types of financial corporations and their subsectors. And it speaks to corporate ownership structure of financial corporation sector. So basically a nationality-based discussion of financial corporations. The chapter further, just one second. The chapter further discusses the issue of non-bank financial intermediation or shadow banking. And this builds on the discussion that has been going on since the global financial crisis, but it's now been brought into the SNA because the previous SNA didn't cover too much on non-bank financial intermediation. And then finally, there's a discussion on the link between financial corporation statistics or statistics on financial corporations and financial instruments in the SNA, and the alignment with the monetary and financial statistics manual. So let's discuss in a bit more detail. So the first section of the chapter 29 will discuss the role, diversity, and growth of financial corporations. So essentially, the chapter will start out discussing financial corporations, the types, their structures. Specifically, it will include a discussion on the impact of technological innovations on the financial industry and how to integrate fintech companies into the existing framework. And yesterday you heard this discussion in the digitalization presentation, which during which the presenter spoke about the different types of fintech corporations that will be mentioned or addressed in this chapter, and how we will integrate them in the financial corporation sector to collect data on them. And basically what we are suggesting is that we include these corporations in their normal subsectors. So we're not creating any further breakouts or any further subsectors to show fintech corporations per se, but they'll be integrated in the normal subsectors within which they fall. So insurance companies or insurtechs will be part of insurance corporations subsector. Companies engaged in lending will be a part of, will be incorporated in the relevant subsector. So no distinct breakdown for for fintech corporations. Secondly, the chapter will discuss some nationality-based breakdown of financial corporation sector. So here it's discussing a new breakdown in the financial corporation sector, focusing on domestic and foreign controlled corporation sector, and then further breaking down those domestic and foreign controlled corporations to show those entities that are controlled by those entities which are part of multinational enterprises. And the issue of control here we are talking about is based on the balance of payments and a BD4 definition of control, and not necessarily the definition of control which is included in the current SNA. The second section of this chapter will speak up, well, we already said that it speaks about the subsectors, the financial corporation sectors and subsectors. It also provides more detailed analysis of the various types of financial corporation sectors. The section will basically be structured around the definition and key activities of the types of financial corporation subsectors, any subcomponents, the source data necessary to record or measure the size of these corporations for the economy, and any national accounts considerations relevant for that subsector. Thirdly, since there has been much discussion and much emphasis on the role of shadow banking or intermediation occurring outside of the regular deposit-taking corporation system, the updated SNA will bring into the manual some of these discussions on how to bring into focus non-bank financial intermediation. The focus of the discussions will be on recommending supplementary breakdowns of the non-bank financial intermediaries. And in terms of the discussion is basically a more wholesome discussion on further breakdown of or disaggregation of the financial corporation sector. But within this, we are breaking down non-bank financial intermediaries so that we can understand better the role of shadow banking in particular economies. So here, the insurance subsector, the insurance sector is broken down into life and non-life subsectors. Pension funds are further broken down into defined benefit and defined contribution schemes. Money market funds are broken down into constant and variable money market funds, and non-money market funds are broken down into open and closed non-money market funds. And then there are other supplementary breakdowns for captive financial corporations, specifically breaking out SPEs. The last section of this chapter will speak about the links to monetary and financial statistics, or the links of SNA discussion on financial corporations and its sectors and subsectors, to the discussion on financial corporations in the monetary and financial statistics. And this section of the chapter builds on the 2008 SNA chapter 27, which covers now discussion on flow of funds. And the discussion on the linkages will include sectoring, coverage and classification of financial instruments, any conceptual differences pertaining to specific instruments, for example, loans, etc. And basically showing how to reconcile SNA discussion or classification of financial corporations, sectors and subsectors, and financial instruments with the MFS definition of these. The second main chapter that deals with financial issues is chapter 25, that will deal with selected issues for financial instruments. And this chapter will include some sections of what was covered previously in 2008 SNA chapter 17. The chapter essentially is, the chapter provides additional details for financial instruments such as standardized guarantees, financial derivatives, and employee stock options. And then it goes into some discussion on how to record the flows associated with certain financial instruments. So here, on the treatment of standardized guarantees, there is no material issues that the chapter underlines with respect to the treatment of standardized guarantees, but basically provides additional information so that compilers can better understand how to treat these. It goes into some detail on the types or classes of guarantees. It speaks about how to record standardized guarantees, and some additional discussions with numerical examples. On financial derivatives, the chapter, there is an expanded discussion relative to what was in the 2008 SNA to cover the different types of financial derivatives. And there are more details on the types of instruments by instrument type, by market risk, by how these instruments are traded, etc. There is a more detailed discussion on the functions, uses of derivatives, including hedging, arbitration, speculation, etc. There's some discussion on the risk, and there's some discussion on how to derive the positions and the flows associated with financial derivatives. So this is a much more expanded discussion relative to what was covered in the 2008 SNA on derivatives. On employee stock options, there is there's no change except there's some discussion noting the classification of employee stock options as equity instruments, and there are some numerical examples provided in the chapter to assist the compilers on how to estimate the flows associated with these instruments. There are a few specific cases where the chapter goes into details, such as on the issue of provisions, write-offs, and allowances. There's an expanded discussion on loans, and it goes into some details on how we treat provisions relative to the discussion in the MFS, and some discussion on how to distinguish provisions from write-offs. And then finally, there is a more detailed discussion on how to derive the flows associated with financial assets and liabilities of selected instruments. And here the starting point for this chapter is, again, chapter 17 of the 2008 SNA, but then there are additional instruments that are added, and the chapter goes into more details on how to derive the flows or transactions and other flows related to these financial instruments. Finally, the chapter the chapter 37 speaks to the from whom to whom tables and related financial analysis, and this is a relatively new chapter in the 2025 SNA. It will build on the chapter that deals with flow of funds in the 2008 SNA. There is an emphasis here. The discussion is predominantly on the from whom to whom dimensions of the sequence accounts, and essentially the chapter will speak to describing the from whom to whom tables, what they are, what they are used for, and important economic or financial indicators that can be derived from these tables. And first, the chapter goes into an overview of the SNA sector accounts, the tables, and how to derive the from whom to whom tables. The section discusses what the from whom to whom tables are, which are basically tables that display financial instruments for any given sector over time and shows the interconnectedness between other institutional sectors. So who is holding what instrument at what particular time, and which other sector is the counterparty. So there's also expected to be a discussion on the key data sources, how to gather data for various instrument types and from the various institutional sectors, how to use counterpart data when they're not available, and there's a discussion on security by security databases and the uses of these in compiling from whom to whom tables. So there is an overview of the main sectoral tables, including, as I mentioned before, some underlying data sources, some important financial indicators that can shed light on financial risk and vulnerabilities. So issues such as leveraging, sectoral holdings and the counterparties, etc. And then the chapter will speak to from whom to whom tables, which include the non-financial accounts, the financial accounts, and the balance sheets. There is some discussion on an overview of the financial account from whom to whom tables, which highlights issues and holdings of various financial instruments, including loans, debt securities, equities, and investment fund shares, as well as other borrowings via other instruments in relation to the acquisition of those assets. So basically, an institutional sector's positions or transactions in various instruments, and the counterparty institutional sector, so who they're borrowing from, and to whom they're lending financing in these instruments. And the financial accounts deals with the flows, the transactions in these instruments during a particular period. The balance sheets deal with the stock positions for a particular point in time. And then the balance sheets analysis or the tables allow you to highlight the interrelationship across various institutional sectors of the economy. Finally, there is some discussion on the analytical usefulness of the from whom to whom tables, which can help to provide more granular information in allowing for identification of debtor-creditor relationships amongst institutional sectors. So what I just discussed. In addition, there is a discussion on sectoral risks and vulnerability and how to identify these. Including discussions on mechanism of transferring risks from various institutional sector to other institutional sectors of the economy by looking at the sectoral balance sheets and any relevant from whom to whom tables. The discussion also includes other macroeconomic presenting and discussing how to derive other macroeconomic and financial indicators coming out of the from whom to whom balance sheets and financial tables. So there are other uses that are mentioned in the chapter, or it's proposed that other uses will be mentioned in the chapter, other macroeconomic uses of the from whom to whom tables or the institutional sector accounts, including financial stability analysis, monetary analysis, transmission mechanisms, transmissions of various shocks across or within sectors, etc. So that's essentially in a nutshell my presentation on the main updates related to the financial corporation sector in the 2025 SNA. Thank you, and I look forward to any questions.
Thank you very much, Francine. If there are any questions, please raise up your hand or put in the chat function. Would be comments or could be just normal reactions to the issues that have been presented. I don't see any. I always take it positively that it means the issues were very clear. Yeah, I think at this stage, according to the program, I would propose just a short break so that we don't suffer death by PowerPoint here. So let's take a 15-minute break and then we'll be back for the next presentation on well-being. So but have your questions ready or issues that you want to raise. Yeah. So let us just take a short 15-minute break. Hi, Richard. Maybe you might just wish to just set up. Is it in the same slide? You might just want to put the slide up and just.
Hi, Alec. Yeah, let me just share my screen.
Sure.
Okay, which one can you see, Alec? Alex, sorry, can you see the presenter view or the actual slides?
I can see the presentation view, but the slides look very small, of course.
Okay, 1 second. How's that?
Yeah, that's much better.
Okay. All right.
Yeah. So colleagues, welcome again. It's actually 15 minutes. So we're going to go ahead to our next presenter, Richard Wild. Richard is a senior economist in the IMF Statistics Department, and he'll be giving a presentation on well-being and sustainability. So Richard, you have the floor.
Thanks very much, Alec, and good morning, good afternoon to everyone. I know we're in various different time zones. So my name is Richard Wild. I'm a senior economist in the IMF Statistics Department. I work alongside Francine, who presented earlier. And I used to work in the UK Statistics Office on national accounts, and now that's my specialism in the IMF. Some of you might know me when I worked in the Pacific region a few years ago as a statistics advisor. My involvement in well-being and sustainability for SNA 25 has been specifically working on the labour, education and human capital sub-team, and I was also working on the split asset approach for some time as well. So that's my specific background, but this presentation is going to cover fairly quickly the main updates, the core updates and the extended updates that are intended in the SNA 25. So without further ado. Second. Okay, so I'm going to start off with just a brief bit of background, a couple of slides on concepts and SNA limitations, and then a couple of slides on what's actually already of interest in the SNA with regards to well-being and sustainability, some key indicators of relevance. Then I'm going to move on to the core SNA 2025 updates that Peter summarized earlier. We'll have a little bit more detail on some of those. And then finally, again, Peter's mentioned these in his overview. I'm going to talk in a bit more detail about some of the encouraged breakdowns and extensions. And I guess, you know, as an overall preface to this, for those of you attending today in this region, I've worked with a lot of the countries in the region that we're presenting to. You know, SNA 2008 was 16 years ago. It's still being adopted in many countries. There are many aspects that it's not possible for your countries to adopt based on resources and data availability. As Peter said, this is going to be a long process. It's not legally binding. These are the ideals that we're aiming for, but hopefully, you know, they are targets that we aim for, and over time we start to move towards them. Specifically for the core updates, but some of the encouraged breakdowns are very useful and interesting for social and economic policy, and they may be more pertinent and more possible in each of your countries. So just by way of background, obviously GDP has been a yardstick for a long time, more than 70 years, really. GDP and GNP, it's a measure of economic performance. That's what it was always intended to be. But its linkages to how well off a country is, how well off its people are, how happy, and you know, what's their ranking in the world. It has led to its misuse over a long period of time, and as probably we're all aware, a lot of people don't really see the system of national accounts. They just see GDP as an indicator. There's arguments that it's a weak measure of well-being because that's not what it's designed for, and hence there's a view that the SNA has little to offer in this regard, even in its current state and its previous iterations, SNA 93 and 68 and so on. Excuse me. So, you know, the aim of the SNA 25 is kind of twofold in a way, is to clarify, you know, what the SNA can do in its core form and what it can do via extensions. It has a lot of interesting stuff already in it that could be linked to well-being. So existing national accounts aggregates on income, consumption, savings and net worth that link into well-being and sustainability. They're not perfect, you know, they don't cover on the face of it distributional aspects. They are aggregate measures, but they have important linkages that we have to consider and promote. Then the second aspect, you know, we can use all of that knowledge that we've assimilated over the years to develop accounting rules and structures and to organize these social and environmental data outside of the SNA itself, but using similar principles and using interlinked data so that we've got consistency and conformity across countries. You know, we've got some kind of standardized frameworks where we can look at what's going on. In some cases, it's not going to be perfect. In some cases, there will be different aspects that different countries choose to look at, different assumptions. But if we start off with a basic framework and interlinked frameworks, then that's a useful thing to do. So SNA 25 will have 3 chapters on wellbeing and sustainability. Chapter 2 is an overview. That's already drafted, and you can see that on the UNAG website. Chapter 34 will cover well-being. That's also already drafted and can be seen on the UNAG website. As of yet, chapter 35, which will cover sustainability, is not drafted. There is an outline, a concept note, but it's not available yet. So I guess, as for all of these chapters that exist so far in draft form and the other chapters that exist as concept notes, there is going to be a period of significant editing and work to make sure that they're cohesive, the references interlinked, the concepts interlink, and so on. But it's, yeah, there's not a huge amount of time left, but that's the work that will take place before publication. So chapter 2 gives an overview, and chapters 34 and 35 give more detail. So some key points and the general philosophy to the SNA, the new SNA content on wellbeing sustainability. There's a recognition the different aspects of the way that we can account for well-being and sustainability are at different levels of standardization and development. So the chapters themselves, they're not prescriptive, they're not definitive. They offer a starting point. They offer a way of summarizing key work so far and the key directions that could be investigated and the key linkages to other systems. But they're not prescriptive. They're meant to be discussive, and I'll probably use the word discussive several more times in this presentation. So for the SNA 2008, I'm sure all of us would admit that we're not necessarily familiar with the chapters very far at the back of the SNA 2008 on very specific topics. In theory, we should be, and yeah, we would recommend that even if these chapters in the SNA 25 relate to extended accounts that are beyond the core accounts. It's useful information, it's useful stuff, and we'd encourage you to look at it and see what's already measured in your country and see what might be feasible. So turning to concepts and SNA limitations. So firstly, let's look at the concept of well-being and sustainability. Again, in this context of the chapters being discussive, and the fact that work in these areas is far from concluded. The SNA is not going to offer definitive final definitions of well-being and sustainability, but broadly, well-being covers the material well-being of households, covers things like education, health, labor, wealth, social, environmental aspects, freedom, and some other factors. So well-being is kind of how things are now. Sustainability is the ability to satisfy the needs of the present without impacting on the needs of future generations. So that implies a time dimension, a wealth dimension, if you will. So we need an accounting framework to estimate the stocks and the flows of these different types of capitals, this kind of comprehensive view of economic, human, environmental, and possibly social capital. Actually, social capital is not going to be particularly even recommended as an extended part of the SNA for the time being, given its state of sort of evolution in terms of analysis. But we can talk about it at the end if there are questions. But certainly, looking at economic, human, and environmental capital will be either core in some way or a recommended extension in the SNA 25. So as I said in the earlier slide, although the SNA doesn't cover things beyond the economic in general, we can use the accounting-based approach to address the challenges of compiling these different composite indicators on health or education and so on. That may not otherwise be coherent. And indeed, already over the past few decades, different types of accounts that use SNA principles have been developed. So we have this system of environmental economic accounting. We have satellite accounts for education and training that have been developed, the system of health accounts. So we can use these kind of frameworks and tie them into the national accounts, and indeed other types of frameworks to help us measure well-being and sustainability. But yeah, overall, just to emphasize the point, the SNA 25 is not going to be prescriptive. There will be debate about lots of these concepts. It's more about understanding the potential linkages, and it's really about saying not what you should be measuring, but guidance on where you could start and how to measure things in a coherent way. So for now, the SNA only covers part of material well-being. These are economic accounts, so it's about materiality. It covers outputs, not outcomes. We cover the sale of cigarettes. It doesn't cover the potential negative health impacts from smoking or overeating from food production. The accounts don't cover subjective well-being or spiritual well-being or well-being utility gain from environmental aspects. The accounts also include defensive expenditures, and they exclude externalities, which can be positive or negative, and both of those affect well-being. So by defensive expenditures, we mean things like mitigation against climate or health disasters. GDP goes up, even though people are worse off. So there's this sort of perverse impacts on well-being. And positive and negative externalities, pollution as a negative externality is not covered, but clearly that affects well-being. SNA records exchange values. It doesn't record welfare values, and welfare values include consumer surplus, which internalizes all of those externalities. The amount that people would be willing to pay. So those exchange values, it sort of ties into the fact that if we measure exchange values, production and consumption are linked to well-being, but they're not directly tied in. The utility that you get from consuming something doesn't have a direct linkage to the change in your well-being. So, in a market economy, prices reflect the cost of production and the relative benefits or utilities to be derived from them for production or consumption. So that connection is there. But changes in the volume of consumption, for example, aren't the same as changes in well-being necessarily. You think about overeating as that earlier example. And changes in well-being may not be proportionate to the increase in expenditure. And beyond that, the unit that pays for the product is not necessarily the unit that consumes the product. So there are linkages, but they're a bit nebulous, and that has to be taken into consideration within the present SNA framework. The last thing to note in terms of the SNA's limitations, at the moment, the production boundary excludes most household services. So we include owner-occupied housing services, the employment of domestic staff, as a minor element, but obviously owner-occupied housing services is big in many countries. The 2025 SNA will extend the production boundary to include some unpaid household services, not all of them, not kind of the autonomic ones like eating or sleeping, but the ones that could be performed by a third party are going to be included. So it does have some limitations. Even once we get to the SNA 2025, and that's what we're aiming for, it's still not going to be a completely comprehensive framework to capture all aspects of well-being in a single place, or indeed in a single number. We need to consider multiple perspectives. So a bit more detail on what's relevant to well-being and sustainability in the SNA. So looking at well-being, I said well-being is kind of about the now, how well off a person or a group of people or an economic area of people is now. We have income and consumption that relate to current measures of well-being. It's important to stress that we should look at net rather than gross measures to account for the cost of capital and the generation of income. There's always a cost to production. There's a key focus on household final consumption and disposable income, and particularly you can think about actual final consumption of households, where that's household final consumption expenditure, but topped up to include the value of individual public services that are provided by government or MPISH. And then we can also think about adjusted disposable income, so the actual income of households increased for the value of social transfers in kind provided by the non-market sector. So we need to think as widely as possible in terms of our measures of income and consumption and their relevance to well-being. We've got to consider changes in the mix of products consumed, the types of income concerned, the types of income earned, Other considerations, actual household final consumption expenditure includes individual government and non-market services provided to households, but also, of course, collective services are provided. They impact on individuals and households' well-being. So we have to consider those. And as with any measures in the national accounts, we have to consider relevant prices to determine volume measures if we're looking at deflation or direct volume indicators of aspects of these things. In terms of wealth, so wealth in terms of linking to future well-being, stocks of financial and non-financial assets, financial capital and non-financial capital and other types of capital. So that ties into sustainability. Clearly, we do have measures of wealth in the national accounts now, financial and non-financial assets. Key for households in terms of well-being, we've got to consider changes in the asset mix, and particularly you think about the main assets that households own, accommodation, homes, housing, etc., vehicles, financial assets, and also consumer durables. So of course those are included in household final consumption expenditure. They're not considered to be an asset used for production purposes, because by definition that most of the things households are doing are outside the production boundary, and the current framework. So we need to consider consumer durables more in estimates of wealth in the SNA 2025. We have to consider other things, real terms, per capita measures, distributional aspects. There are other assets outside the SNA, but as I talked about a little bit earlier, we have these comprehensive wealth measures that look at environmental, human, social capitals outside of economic capital. We have to include those. We have to have alternative asset boundaries to estimate some of these extended accounts that are being proposed. And again, sort of akin to collective government services and impacts on income and consumption. If you think about wealth, individual wealth, you still benefit from your kind of unknown share of the use of public infrastructure. So roads, schools, hospitals, and so on, they benefit us. They're assets that last over time. So we have to make considerations for their impact on household well-being as well. Also, in the SNA, we do already have some environmental indicators. There are things that are directly measured. So the SEA, the System of Environmental Economic Accounting, obviously is the most comprehensive framework, but the 2008 SNA already includes measures for stocks and flows of economically owned, of natural resource assets that are under ownership. We have resource rents. We have changes in the value, other changes in the value of those assets, and other changes in the volume of those assets included. So, other changes in asset values that don't relate to transactions, such as market forces or the result of legislation that changes the value of environmental assets. Those are included. And then we have other changes in volume. So we have some positive aspects to that. The mineral discoveries are included under other changes in volume in the SNA 2008. We have depletion included as a deduction presently in other changes in volume, but as Peter said, that's going to be included as a cost of production. We have natural disasters and uncompensated seizures and so on. They're also in that other changes in volume account. But from the environmental side, we are measuring what's going on, as well as environmental expenditures are included by government and non-government sectors, and environmental taxes and subsidies. I guess the overall point about the SNA 2008 and the evolution to SNA 25 is that the view was that some of these stocks and flows are not quite recorded in the right place, or not quite recorded in the right way for us to really understand production, consumption, and accumulation processes and decisions as well as possible. So a neat segue then. So that's what we cover already in the SNA 2008 and the limitations of how it's measured. So looking at what the SNA 2025 updates mean, firstly, looking at environmental accounts, there's going to be various inclusions. So firstly, and again, so Peter summarized these, most of these, if not all of these, we're going to include stocks and flows of renewable energy resources. So there's going to be a revised revision to the asset boundary. By renewable energy, we're looking at, we mean energy from wind, from water, from moving air and water, geothermal heat, solar radiation. A new asset is going to be created that will be split between government and market producers, and then we're going to be using, the SNA will recommend using a valuation based on the net present value of the future income streams associated with those assets. That ties in nicely to this broader change to adopt the split asset approach. And the idea behind the split asset approach is that the revenues, the rents that come from the use of these natural resource assets don't just accrue to the government as the economic owner, but there's a split between the between the operator who is extracting those resources, let's say, and the government as the kind of the legal owner and the part economic owner. So this ties into the SEER approach to measuring resource rents, and uses revenues less costs, and then again it uses this net present value approach to value the natural resource asset. And then beyond that, we need to consider which of the flows relating to the production of that asset go to government in terms of royalties and taxes and so on, and then the residual that accrues to the market producers. And that's going to be recorded as as a shared economic ownership, and will be split. It will show up in the other changes in volume accounts for each sector. So if a new oil discovery is made and a government agrees with an oil company to extract it, at that point in time, there'll be a change in volume of assets for the market sector producer and for the government. So that's all. You can see the detailed papers on the UNAEG website explaining the details of those. So moving on, as Peter said, depletion of natural resources is going to move from being recorded in the other change in volume account, to the production account, and depletion it's important. Presently value added generated from the sale of, say, non-renewable natural resources ignores the fact that its supply is by definition finite. Depletion is akin to depreciation of produced non-financial assets, so it's going to be included alongside as a cost of production. And if you are in an oil-rich economy with a 30-40 year span on your proven resources, then clearly depletion is something that we need to consider in terms of the sustainability of that production process and the revenue being generated. Next, there is going to be a clarification of the production boundary for biological resources, and really this is it's clarifying the distinction between managed and unmanaged resources. A separate asset class is going to be proposed for all such resources. Uncultivated resource stock changes are no longer going to be part of other changes in the volume of assets, but instead they're going to be part of the production account, or they're going to form part of property income, where there's some degree of control or management over those resources. And then lastly, there's going to be updates to the recording of emissions trading schemes. There's this idea that the SNA 25 is going to embody that the atmosphere is an asset, and it's going to record emissions permits as financial assets, as a tax on production. It's financial assets, and there'll be a tax on production recorded at the point of their surrender. Also, the word provisions is mentioned here. So just to clarify that, by provisions, we mean things like terminal costs. So the cost of remediating a nuclear power station or any power station at the end of its life, or the cost of remediating an oil field once the oil has been fully extracted. So that's part of provisions. Provisions also includes funds set aside for expected payouts. It's kind of between a liability that's finite, that's defined, and a contingent liability. It's something where a payout is known, is expected to occur, but not quite how much and exactly when it will occur. So it's somewhere between a liability and a contingent liability. So SNA 25 will have separate tables recording those provisions more clearly. So moving on from the environment, I mentioned this already, but just a little bit more detail. So the production boundary is going to be extended to include household activities, household work that could be performed by someone outside of the household, the so-called third-party criterion, and that covers caring for children and the elderly, the sick, cooking, transport, laundry services, household management, shopping, volunteering, and information services. So the idea is We've already included owner-occupied housing and domestic services, and their inclusion prevents distortions happening if there are changes in, say, home rental and home ownership because of policy changes or changes in income levels. So the idea is, in a modern society, a lot of the services that we previously performed in the home and were unlikely to contract out, it's much more prevalent. So that's the rationale behind it. This is a core update. The minimum recommendation is that every 5 years, the supply and use tables would have an additional element to measure this productive activity. In order to value this aspect, we would need time use information, and we'd also need appropriate market sector wage rate. So again, it's depending on the statistics available in your countries. Yeah, that obviously could be not possible at this stage in time, but it's a core recommendation, so it's something to consider in the future. Now, we're not mentioning it here, but there's obviously household work ties into, it's part of labour in a sense. We're discussing labour accounts here, but you can see the draft chapter 16 of the 2025 SNA, which goes into more detail about labour accounts. There was a question earlier from a colleague from New Zealand, I think, about whether it will be core. I think it's going to be, the labour accounts will be between the present chapters 9 and 10, so the use of income account and the capital account, that's where the labour accounts will sit. And if you look in the chapter, there's this standard framework that's being proposed, which looks at 4 quadrants: jobs, persons, volumes, and payments, and ties those into national accounts aggregates. So those are the core elements in terms of environmental and other aspects. Moving on now to encourage breakdowns and extensions. And I will maybe move a little bit more quickly because I think I'm supposed to be finishing at 1:30. So firstly, distributional accounts are largely going to be encouraged. Actually, there is going to be a standard breakdown in the core accounts by income decile, looking at consumption and worth in the core SNA. But further breakdowns are possible and encouraged as Peter mentioned, as per national priorities, and of course capabilities as well in terms of data and resources. Education might be a key policy issue, or health might be a key policy issue that your government is interested in looking into further. So what else to mention about this slide? Additional breakdowns could cover various aspects: gender, age, level of education, employment status, geography, and more. One thing that's it's kind of a new concept to some of you maybe, there's this table here is just an example of what a table may look like by income quintile, looking at splits of household consumption across different categories. The last category, ecosystem services, you can look in the SEA, of course, to read more about that, but that covers the things that we get from the environment, so provisioning services like material and energy that we can take from the environment, regulation services, automation of regulation of the climate or biological processes, fish stocks, animals reproducing, and so on, and then cultural services that we also get from the ecosystem. So perhaps that's a new term for some of you. Again, this is an extension. This is just an example of a possible table that could be put together. Moving on, human capital and education are encouraged breakdowns and extensions. So labour is core. Labour clearly ties into human capital, as does education, but they're not. Neither human capital nor education is being proposed as a core part of the SNA. But certainly highly encouraged extensions if you can start to measure them. So the key thing about human capital is that it has some characteristics of being an asset, but according to the current SNA asset boundary, it's not an asset because it can't be transferred. It's self-embodied. All of the skills and knowledge and intelligence, memory, social prowess that an individual has and puts together to become more employable, to produce a certain amount of output. That represents each individual's human capital. You can teach someone everything you know, but they're not going to be productive in exactly the same way as you. So it's a different kind of asset, and it can be considered as such in an extended account. You can estimate it using input costs or income approaches. So you can look at how much people spend on their education, how much individuals spend, or households, employers, government, and so on. Or you can look at the future income streams that individuals get from the future income streams that individuals receive as a result of their human capital. So this diagram kind of says that education contributes to human capital. It's not the only factor. Human capital underpins labor, but it's not the only factor underpinning labor. And labor is a key input to production. Labor has the clearest linkage, but human capital and education are some of our big factors, but there are other factors included. So, as I said, labor is covered in chapter 16. Excuse me. We already have the satellite accounts for education and training that the UN has put together. Those are fully SNA consistent, and they can be developed to provide a sort of a supply use table approach to what are the total, who's supplying education resources, and what type of education is being supplied, say by government sector, market sector, by household, primary, secondary, tertiary education, and how is that being used. Similar to that, health accounting, we already have the system of health accounts 2011. That's the standard approach. That could be linked into the national accounts as well. And again, the idea is that this supply use table framework is a very useful way of looking at what's going on. Who's supplying which kind of health services, primary health care, and so on. Which sectors are supplying it, and of which type, and who is consuming it, and how. So I've gone over time slightly, so I won't go into too much detail on that slide, and maybe I will stop talking there and hand back to Alec.
Thank you, Richard. If there are any questions, maybe we can hold on to them and go straight to the next presenter, and then we could have a discussion and hand over the questions that are otherwise, unless there's somebody who has a quick reaction to this presentation on sustainability. I'm just trying to check any hands here. Okay. Oh, yes. Hamish. Please go ahead.
Thanks. And thanks, Richard, for the presentation. I got a couple of questions, but maybe I'll hold on to a couple of them for later. One thing I was a bit wondered if there was something around terminology for the household services, because you had that sort of, it looked like an extension to the core in terms of including them, but I just wanted to check that wasn't suggesting that they would be included in change GDP. So this was things like unpaid household caring and things like that. That was more a clarification of what would be in that thematic account around household unpaid work, or have I got that wrong somehow? If that makes sense.
The extension to the boundary is core. So I think in the slide it says, the minimum that's expected is that every 5 years or so, the supply use tables would include an extension to that, linking in that aspect of production alongside market and non-market production. How that actually plays out in the core accounts, I need to get back to you on further detail about that. So the decisions were taken, I think, in March the 7th at the UNSC is exactly how it's going to play out. So pretty hot off the press after these slides were produced. So I need let me check up on that. But it is core, and it should impact on GDP.
Okay. Yeah, come back to me. That'll be good. Thanks.
Okay.
You said you had the list of questions, or this was the only one?
Well, I don't know whether you were hoping to keep them for a later session or now. I do have a couple others, but yeah,
Okay, fine.
up to you.
Okay, fine, thanks. Then I propose we go to the next presentation on thematic and extended accounts. Francine is gonna present this one.
Thanks, Alec. It will be Thomas. Thomas is presenting.
Okay, I had that impression because that's what the screen was giving me those hints, and I was really trying to check in my agenda here, was like, no, I'm seeing something different. Anyway, thanks, Thomas. You have the floor.
Hi, good afternoon, good morning, Alec and colleagues. Thanks. And in the meantime, I was trying to get the mic to turn it on to respond. It's really problem. So I will just do this presentation on elaborating on the accounts and talk about thematic and extended accounts. We basically will be ending today the same way that we ended yesterday's session, by talking about how we communicate and present the statistics. So the presentation will not be essentially on, we will not be delving into technical issues, we'll just be making some references to some of the technical issues that have already been discussed. Now, Pete earlier talked about thematic and extended accounts, and I will not attempt to repeat what Peter said. And Peter said earlier, and also in Rich's presentation, he also talked about some of the thematic and extended accounts related to well-being and sustainability. So again, I will not go through that and repeat what has already been said. So in terms of the presentation, I will just talk briefly about the chapter. There's a chapter on thematic and extended accounts, provide an overview of thematic and extended accounts, the role of these accounts, and it's talk briefly about the tools to develop these accounts and the steps to develop thematic accounts. I'll also talk briefly about one type of extended account, and there's a separate chapter on this, there will be a separate chapter on this in the 2025 SNA. And that's on the informal economy. So I'll just spend a few minutes talking about that because we have not spent much time talking about that in the session. So as you may be aware, the sequence of accounts is fully integrated and consistent. But sometimes we need some additional information of some further disaggregation and more detail in order to answer some broad economic questions. And this is how and why thematic and extended accounts come into play, in that they give us the means in order to be more flexible and to provide a further disaggregation of different statistics in order to address specific economic questions. So thematic and extended accounts are essentially flexible tools for increasing the visibility of key economic phenomena. They maintain the coherence of the overall conceptual framework of the SNA, but they're able to do certain things, additional things. One, they're able to bring together pertinent data in one place, prevent further disaggregation, as I said, that you would not find in the sequence of accounts, and also present alternative aggregations and approaches and broader context. And as I said, we talked about that earlier, which made reference to that, for example, in the education accounts and the health accounts and so forth. But one account that we'd be quite familiar with, what is previously called tourism satellite accounts, or tourism accounts, that would be another example of a thematic account, in that it provides further disaggregation of the expenditure by visitors, consumption expenditure by visitors. So essentially, it looks at the same basic SNA concept of final consumption. It uses the same basic concept of residency, but it brings these together to provide further disaggregation to look at what we may define as a visitor or tourist, and then looking at the economic behavior of that individual or that group of individuals. But we can also have supplementary tables, and supplementary tables can be used for topics that can be covered in a single table with a very limited scope. So if you have a single issue that could be covered in a single table with a limited scope, that would be put in a supplementary table and would not be part of thematic and extended accounts. One thing I should mention before going further, this is the new chapter in the SNA, and it's new chapter 38, and it will in the 2025 SNA, and it will be replacing chapter 29 on satellite accounts in the 2008 SNA. So in terms of an overview of thematic and extended accounts, the SNA provides a flexibility for economies to choose topics for thematic or extended accounts. So countries are not, as Pete said earlier, the SNA is not a legal document. Countries are not bound by law to prepare any specific accounts. So countries can decide which thematic or extended accounts that they produce based on the needs, based on resources, and so forth. But again, going back to tourism, if tourism is very important for your economy, you could decide to produce tourism accounts. If you, for example, mineral resources are very, very important for your economy, you may decide to produce mineral accounts or education accounts or health accounts based on your needs, based on your resources, and so forth. So essentially, this would be based on the economy's structure and growth pattern, the key policy issues, and the data availability. The 2025 SNA encourages extended and thematic accounts to fill important information gaps on aspects of well-being and sustainability, including the labor accounts, as we talked about earlier, the digital economy thematic accounts, household unpaid service work, health, education, and human capital extended accounts. Now, there's a distinction between thematic and extended accounts. Both thematic and extended accounts provide complementary data that allow insights into a key activity or aspects of the economy that lacks visibility in the standard sequence of accounts. So thematic accounts, on one hand, the thematic account increases the visibility of a certain activity, including standard national accounts aggregates, or provide additional detail on its composition. The extended account show the effects of expanded the standard national account boundary of production, consumption, income, or wealth. So a very simple example, for example, is to look at household unpaid service work. Household unpaid service work is not part of the SNA production boundary, but we recognize that household unpaid service work for own consumption is very important for well-being and sustainability. So accounts that extend the SNA production boundary to look at household unpaid service work for own consumption, that would be part of the extended accounts, because essentially we extended the SNA production boundary beyond what we would normally use to measure GDP and production and so forth. So again, some examples of thematic accounts, for example, tourism accounts, health accounts, agriculture accounts, digitalization, and so forth. These increase the visibility of key economic activity. They present alternative aggregation to focus on key sector or industry segment and analyze key phenomena in more detail. And we can look at extended accounts, for example, unpaid household work, education, and human capital, as Richard mentioned earlier. They expand or modify the production, consumption, or asset investment boundary. They test new or experimental methodologies, and they analyze key phenomena. So as I said, one thematic or extended account that we can look at is in terms of the informal economy or informal activities. And these thematic accounts really bring greater visibility to informal activities. And there's a separate chapter on the informal economy in the 2025 SNA. So going back to the 2008 SNA, 2008 SNA recognized the importance of informal activities and that they should be integrated in the national accounts. However, neither the 2008 SNA nor the International Labour Organization's recommendations on informality at the time provided a comprehensive framework for measuring the informal economy. So essentially, there was no framework for measuring the informal economy. The 2025 SNA will introduce a framework for measuring the informal economy with a more precise definition of what is the informal economy and how it should be measured and so forth. And I should just point out this is going to be fully consistent or is fully consistent with the ILO's new recommendations on informality, which coincidentally have just been revised and introduced, were introduced last year. So there will be a revised SNA BPM chapter that will examine the emergence of new informal economic activities that are often associated with lower or uncertain income for workers. So looking at the informal economy, we'll look at the links to digitalization, for example, with the growth of informal rideshare services like Uber and Lyft and so forth, and look at the impact of digitalization through providing these services and the related increase in informality. And the goal of measuring informality, or the goal of measuring the informal economy, is to provide a complete presentation of the informal economy. And it is not focused on exhaustiveness. And normally there is usually some confusion amongst users in looking at exhaustiveness or looking at the non-observed economy and assuming that the non-observed economy is the same as the informal economy, or that the GDP excludes some components of the informal economy. This is not what we're trying to look at when we look at the informal economy, but we're essentially looking at a component of the economy that is generated through informal productive activities. Now, the informal economy, or the concept of the informal economy, is based on informal productive activities. And informal productive activities are all productive activities carried out by persons and economic units that are in law or in practice not covered by formal arrangements. So again, when we talk about formal arrangements and we talk about the informal definition of informal productive activities, these will be fully consistent with the ILO's recommendations of formal and informal productive activities. So the SNA's definitions, the definitions used in the SNA will be the same definitions adopted by the International Labour Organization on informality. So the informal economy is essentially defined as constituting all informal productive activities. So essentially, when we look at the informal economy in the extended thematic and extended accounts, what we're looking at is informal productive activities produced by all units or across all economic activities or across all sectors. Now, how are we able to capture informal productive activities? We can trace informal productive activities by the nature of the employment that undertakes these activities. So, for example, if we look at in this chart, and this chart is just a brief chart that will show that shows the kind of informal productive activities and how they are constituted. So we can look at the informal economy and break down the informal economy into three broad domains. The formal sector and as one domain, the informal sector as a second domain, and the third domain as household own use production and community sector. Now, we use the terminology sector in this case, but again, this term sector is not the same, defined the same way as we define institutional sectors in the SNA. And that was an issue of discussion, but in the end, it was decided to continue to use formal sector and informal sector, although sector is used differently in that case, because this is what users were familiar with. Talking about the informal sector, this is what users were familiar with, but just to make the distinction that when we talk about the formal sector and the informal sector, we are not talking about institutional sectors. So if we look at, for example, these three sectors, we can first start to look at what kind of employment is used to produce goods and services in these sectors. So, for example, if we look at the formal sector, if formal employment is used to produce goods or services in the formal sector, that would be part of the formal economy. But if there's informal employment that is used to produce goods and services in the formal sector, the production by that informal employment is going to be part of the informal economy. In the informal sector, for example, all the production in the informal sector would be produced by informal employment. So by definition, the informal sector would not be employing formal employment. So all the employment in the informal sector would be by informal employment. Therefore, all the production in the informal sector would be part of the informal economy. And the third group, household own use production and community sector, that sector would be used in informal employment, and the production by informal employers engaged in households and non-formal non-profit organizations, that would be part of the informal economy. We can also look at another group, for example, informal household own use production, non-formal non-profit and non-formal non-profit organizations and direct volunteer work. The informal household, I'll just talk about the first part. Informal household own use production could be the production of both goods and services. And as you know, informal household own use production of goods would be part of the SNA production boundary, but informal household own use production of services would not be part of the SNA production boundary. However, in a broader framework of the informal economy and related to the uses of the implications for well-being and sustainability and so forth, the informal household own use production of services would be part of the SNA general production boundary and would be part of a broader measure of the informal economy. So that is an example of an extended account. So in that case, we extended the scope or the definition of the SNA production boundary and looking at the SNA general production boundary and looking at household informal production of services and including that in the informal economy. This is just a representation of what I presented in the previous table. And in that case, we're looking at informal productive activities by persons in the informal economy. And it basically presents the same information from the perspective of persons rather than from the perspective of economic units. So that was just one example of thematic and extended accounts where we essentially taken the same information, but we provided further disaggregation of the information, providing further disaggregation of production, and we're extending the scope or the definition beyond the SNA production boundary to look at the SNA general production boundary and coming up with a broader scope of the informal economy. So in terms of the tools to develop a thematic account, there are some key inputs into a thematic account, and the main one would be supply and use tables. And as we know from supply and use tables, supply and use tables provide further disaggregation of products and the industries or products and activities. So it provides more granular data that could be used to produce thematic accounts. But in addition to supply and use tables, there's also the need for further more granular source data. For example, data on establishments, for example, which establishments are producing what types of goods and services, the employment that is used to produce these goods and services, and so forth. And that, for example, would be very useful for producing estimates of the informal economy. But you can also look at household data, for example, consumption of households, households producing goods and services for sale to other households and so forth. The residency of individuals and where the consumption of goods and services takes place. And that, for example, is important for producing tourism accounts. So all these kinds of granular data are very useful and very key inputs in producing a range of thematic accounts. So that is really the starting point to producing thematic and extended accounts, getting disaggregated data beyond what is used for the regular GDP compilation exercise. Also useful is having alternative classifications and aggregations that are needed to better understand the scope and the depth of economic activity being studied. So data from the standard sequence of accounts and additional details from the and the supply and its tables will allow for deeper insights into specific activities. Now, the chapter also goes into how to develop or the planning and the compilation process on developing thematic and extended accounts. Developing a thematic account on a key economic activity would include a planning phase and a multi-step compilation phase. And the chapter goes in more deeply into this and how this could be done. Planning in terms of, for example, a precise definition of the activity or the economic phenomenon that needs to be measured. And then the compilation phase, compiling the thematic accounts, disaggregating the relevant elements, and introducing complementary indicators. So that was just to give you an overview of the chapter on thematic and extended accounts. But as I said at the beginning of the presentation, throughout the 2025 SNA, there'll be a range of different kinds of thematic and extended accounts that will be discussed. One, as I said, is on the informal economy, education and health accounts, accounts on household unpaid service work, for example. And these chapters will go into more detail on the technical issues to be discussed, the data needs and so forth, and how these will be put together. Thank you.
Thank you very much, Thomas, for that detailed presentation. So at this point, we go into discussion and question session. Think I already saw a question from our colleagues in ABS. I think it was addressed to Richard. Richard, have you had a look at that issue coming from ABS? I was saying if you can share the clarification on the definition of core accounts and where and how often the core accounts are expected to include the extension of the boundary for unpaid house services. With the broader group here, it would be greatly appreciated. This is a slightly different understanding to that which we at ABS had also. So maybe it was seeking more information. Okay. Any comments? Questions? I don't see anything in the chat, but then maybe I'll ask our presenters if at all there's anything they want to say just overall about the issues that have been highlighted. So I'm just putting them on the spot. Any last parting shot by our presenters?
Okay, I may jump in since I was the last to speak. We've thrown a lot at you over the past 2 days, and there is a lot of information that is available on the update of the 2025 SNA. Some of the chapters are already available on the website, on the SNA website, so you can have more time to read the chapters in your leisure. As Pete mentioned, the global consultation is upcoming, where all the chapters will be made available for comments in the next few months. You can have a head start on reading chapters on the AHU website, but all the chapters, you'll be able to comment on all the chapters over the coming months, and provide your comments on what you think of the chapters. In addition to that, there will be a process, a discussion of the implementation process sometime next year when the 2025 SNA is launched, on countries' implementation plans and so forth. And again, as Pete mentioned, you do not have to implement every single word of the 25 SNA. It depends on your country needs, country resources, and so forth. And it's a process that's going to take place over time. But in the meantime, it will be useful to have a look at the chapters over the next few months and be prepared to provide comments during the global consultation.
Thanks very much. Maybe if there are not any questions, but just for our administrative records, we put up a short evaluation form in the chat function. So I would ask everyone who has joined this meeting just to take a few moments to fill that questionnaire. It's just to help us how we can do these webinars much better next time. So please share, just spend a few minutes. I think it should take you less than 5 minutes. Yeah, otherwise, yes, Hamish, yeah, go ahead, please.
Maybe I'll ask one of my saved up questions. Thanks for that. Thanks, Thomas, for the presentation. Maybe just to comment on that, it's nice to see you. It's been a while, I think.
Good to see you, Hamish.
Yeah, but yeah, just a comment. I guess really great to see the emphasis on the wider set of information and accounts that can be derived out of the national accounts and sort of extended areas. Certainly in the area that I think, well, certainly from a New Zealand perspective, I guess is always hard to kind of convey the possibilities that are there and you know, build that understanding and interest in what's there. So I think having this together in the updated SNA is you know, is going to be helpful. It's probably going to be hard for us to push into that space immediately. I think it's probably fair to say, but it's good to have that there. And yeah, just as a yeah, so in terms of the question I had, I think it's probably more for Richard. I'm not sure if he's there still or not. But it was around the sort of the interaction between some of the natural resource changes and depletion and how to think about some of them. So if we took, so New Zealand has quite a lot of renewable resources, particularly started with hydroelectricity. And we do have some of the SEA accounts in terms of covering off the valuation of those assets. But I guess one thing that happens in New Zealand is that sometimes you have dry years or periods, and so you know the water that's put through the hydro schemes and behind you know big dams of storage of water, they decrease in the amount of water that's there. So I guess if you thought about wind and solar, you kind of don't think about those things being depleted. They're kind of always there, maybe some impact from climate change or something like that, but I think that would be something else other than depletion. But I guess wondering about for hydroelectricity, when you put the water through the dam to generate the electricity and it's no longer there anymore, does that count as depletion? Because it sort of seems a bit strange if you talk about a renewable resource being depleted. It makes a lot of sense for oil and gas and things that you're kind of using up, and once you've used up, it's gone. But yeah, just wondered if yeah, you could clarify that for me, slash if I'm completely on the wrong track around that, or any thoughts at this stage.
Sorry, that was a question for me, Hamish. So I missed the beginning. I missed the beginning 30 seconds of your spiel.
Oh, it was probably it was probably a bit of the background, but so it's really just about, you know, we have periods where you know you have dry periods and the hydro storage goes down, but I guess we're kind of thinking about renewable resources and depletion. Kind of initially we kind of think, oh well, they're renewable, so there isn't any depletion, but how does using hydro water sort of to generate the electricity and maybe reducing the level of water that's below behind the dam that you'd use in future, how does that sort of work? Is that depletion or is that something else?
I mean, I'm not an expert in this particular sub part of the changes. I would, you know, water's always there. I guess in somewhere it's, you know, it is renewable. The fact that it varies from season to season or over some kind of cycle, I don't know. I mean, I'd encourage you to look at the depletion paper on the AG website. and look at the delineations it has. You know, non-renewable, as you say, is clear, right? It's being used up. Then you have, you know, biological things that reproduce in some way, and then we have elements that can be used to also to provide services to us, and those things are delineated within that.
Thank you, Richard, for those insights. So Hamish, you might really want to go back into the paper and the guidance notes on the depression and maybe get more insights here. Any other reaction or? Okay, I do not.
Alec, I did have, if I may, so I just put a clarification in the chat.
Yes, please.
As we said earlier on in today's presentations, yeah, the final decisions came out after these presentations were drafted some while back, and actually part of my presentation is now inaccurate. So apologies to Australia and New Zealand who raised this issue and had different thoughts. So household production of unpaid household labour for services that could be provided by third parties like caring and transportation and so on are going to be part of extended thematic accounts. They're not going to impact on the sequence of accounts. So apologies for that. We will update the slides to make that clear.
And thanks.
So don't panic there, everyone. You don't suddenly have to start measuring valuing those services.
Yeah, the huge statistical nightmare on its own. Yeah. Okay. Any other questions or comments? Yes, Hamish, I see your hand up again. Please go ahead.
Yeah, last one, sorry. Yeah, just wanted to say, really appreciate, you know, I know there's people up on late at night and in the middle of the night places, so yeah, really appreciate effort coming, presenting in a time zone that's sort of more sort of happier situation for where we are in the rest of the world. Really appreciate the effort around that, and yeah, thanks very much for doing that. So from me, thanks.
Thanks, Hamish, and maybe we should come to an end if there are no any other questions. Like I said, we had put up just a short evaluation form just to get some feedback. Please, if you've not done it, please feel free to fill it. Yeah. So let me take this opportunity to thank our colleagues, particularly our colleagues from the IMF. You know, who have had to, you know, work late in the night, and we do not take this for granted. And as you know, our region is so diverse, you know, from the very eastern, western side of Asia to Far East. So it's very difficult, but you've been there to really share us with this, and I'm quite happy that even for the Pacific, we too were a bit worried to say we may end up speaking to ourselves, but people showed up. I think there's a lot of interest in the topic and just to know what is going around. And it's great that the whole process has been very inclusive. So this is, we appreciate so much the whole IMF team. And also my colleagues in the background, Anne and Pina, who have been trying to, and Lepacon, she's not around today, but they've been around trying to do all the logistics and bombard folks in the country, member states with lots of emails to say, please show up for this. So thank you so much, colleagues. And I'm sure we'll meet again because this process is ongoing. And my understanding is that there's more activities that are planned beyond the webinars. So a lot of things coming up. So thanks very much from the ESCAP side, and Thomas.
Yes, thanks, Alec. And on behalf of the IMF Statistics Department, just like to say thanks to you and Pina and rest of colleagues at ESCAP and CIAT for working with us to organize these two seminars. We were up at a good time, 7:30 this week. Last week, it was from midnight. So So we've ended on a good note, and we've been quite happy to see the level of participation in both of these seminars. As you indicated, this is just the first round of outreach. As we release the BPM7 and the 2025 SNA, we'll be having further rounds of outreach sometime in 2025 or 2026. And the chapters are already available. Both the BPM chapters and the SNA chapters are available online on a rolling basis. So as we get to these more in-depth outreach exercises, and as we get to discuss with you your implementation plans, we'll all get a better sense of what you'll be doing and what you'll get a better sense of what you'll be expected to do. So thanks again to all of you for attending, and it's been very encouraging to see all of you. Thank you very much.
Thank you, colleagues. So this brings us to the end of this webinar. So until next time, and to the audience, thanks so much for showing up, and the recording and the slides are also available on the ESCAP event website. So you can always make reference to do your own reading, plus the updates page. Thanks.